In today's video, we're going to have a quick look at the ASX 200, the Victorian situation with COVID-19, and I'm going to talk a little bit about Trump politics. Hello and welcome to another ACY Securities Market Update. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first thing that we're going to have a look at today is at the ASX 200, or the Oz 200 as some of you might know it. It is the stock market for Australia's best 200 stocks. And it has been falling a bit today, and even early this morning was a little bit flat. Now, what's caused the sudden drop-off that we're seeing here in the Australian stock market? Well, the reality of the situation is that we've got an increasing number of COVID-19 infections occurring, with a number of suburbs being shut down in Victoria, and basically the whole of Melbourne being closed down and put into stage 3 lockdown restrictions. Naturally, this affects businesses across the board, and you can imagine just how many there are in a major city, or the second largest city in Australia. So the image that I've got behind me, as while it was falling, it has probably come down a little bit further since then, but at this point in time, I'm not quite sure because we are currently recording. However, the idea behind this is really focused on what's going to happen with the Australian economy moving forward. Are we going to see more infections across the board of Australia, or are we going to be able to localise it to just in Melbourne? Now, the way that Scott Morrison has described the idea of how he's going to try and combat the illness thus far is to basically have 3 pillars or 3 rings of containment. The first ring being around the localised area of Melbourne, and then each ring for travelling further out with different phases of lockdown restrictions. Now, naturally, the borders to Victoria, between New South Wales and Victoria, and of course South Australia and Victoria, are being closed down. In fact, the Australian, New South Wales and Victorian border has already been shut as of last night. Now, just having a quick look, it did open flat. It has been dropping against the COVID-19 announcements. Those Victoria borders have been shut. We're also seeing lockdowns in the hotspots for the next 6 weeks. So that is where we're seeing businesses start to stumble a little bit. In addition to that, though, it's also been backed up against the US market overnight drops, which have also had virus surge impacts occurring for them. So we are seeing a bit of a resurgence. We're seeing these second waves of outbreaks, and they are causing some problems for our stock markets here in Australia and, of course, in the US as well. Moving on. Now, with Australia itself, there is a couple of other things that goes towards the economy here. The first one is Australian banks are considering extending the loan holiday for deferred loans by another 4 months. So initially they were meant to be finishing off in the very short term, but they are talking about extending it considering what's going on in Victoria, and they're also planning on talking about the idea, or at least from the Prime Minister's offices, about extending the JobKeeper payments. Now, these payments were being made to those who had gone without work, and they were basically keeping businesses paying their employees whilst there was long-term layoffs to stop them from being added into the unemployment spectrum. So we might see that occur. There's nothing been confirmed yet, but if it does, either way, all of these sort of measures, these stimulus factors, are leading up to one thing. We've already seen $260 billion injected into the Australian economy in the form of stimulus, both monetary policy and fiscal policy. Now the plans are to start tapering it off. Initially, the plan was to basically cold turkey it and cut it all off very, very quickly, which would have basically meant the Australian economy would have been falling off a cliff's edge. At least now they're starting to smooth out that cliff edge, and hopefully we might see the economy bounce back a little bit easier. Now, moving on to Trump, as always, he is a little bit of a scandal. We've seen him starting to fall in the polls again, and the reason for it this time is another tell-all book. This time it's being written by a family member, his own niece, Mary Trump. Now, previously we saw the Bolton book, which was an expose on his dealings in the White House. This one is about how he is as a person, as a family member. So it is a little bit different. Bloomberg has gotten a handle on one of the books ahead of schedule, and it is quite interesting to see what they have to say, and especially what Mary has said from the few quotes that are available at this point in time. Regardless of that, there are a number of other books coming for him in the leading up to the election. We know of at least 1 or 2 others that are probably going to cause him a little bit of reputational damage whilst he's going into the election point. And naturally, we're also going to be seeing some more things coming out about him over the next couple of weeks. Now, the other part about this that is interesting is what he's doing with the WHO, the World Health Organization. He has decided to pull himself away from that and pull the US with it. So now they've got about a 12-month period where they are going to be slowly withdrawing payments, funding, and anything else that goes along with the WHO membership. So unfortunately, because the WHO does have a large base for US funds, they're going to start struggling as well. So we're going to have to keep an eye on that situation as it develops. And obviously, when it comes to the election time, we might see it as one of the factors that does get argued about come political election points and where they might argue their points about, specifically more from Biden's point of view. Now, really, that's all I have for the news today. It has been a quiet day on the news front. And to add to that, we do have a little bit of news ahead, but there's not a great deal of it. Now, we do have EU economic forecasts. They are tentative. They are going to be on throughout the entire day and the European session. So do keep an eye out for those. They aren't scheduled to an exact time. It's just that they are all day dependent. We also have US crude oil inventories and US 10-year bond auction processes and the money that's coming from that as well in the report side of things. So keep an eye on all of those, especially for trading either the US or in the euro, and keep an eye on what's going on there. It's going to be beneficial to you in the long term, but otherwise the rest of the news is pretty quiet. It's not a high impact warning. Unless we have something that's unscheduled, you're probably going to be pretty safe this evening to expect there to be a little bit less volatility than usual. Now, if there's anything from today's video, perhaps one of the webinars, perhaps one of my TV appearances, or perhaps the panel that's coming up soon, then please send me an email at talktoal@acy.com. And of course, don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.